Thing number two, Gary, we're talking about Walmart, Target. Walmart comes out with a great quarter, Target with a bad quarter. We're looking at the consumer here. Thing number two, Gary, consumer reality and shifting spending.
So we've talked a lot about the consumer and sort of this shifting picture. For much of the last couple of years, despite all the warnings about the bad economy we're in, for the private market economy, the consumer has largely spent and spent and spent. The other side of it was a couple of weeks ago. We talked about buy now, pay later, and the way the consumer is just running up huge amounts of debt. And so there is evidence that consumers are a little bit constrained right now, despite the fact that they're spending a lot. And I think the reason they're spending a lot is because necessities have gotten expensive. We don't believe for a minute that food inflation is only 1 or 2%. I don't know anybody who goes to the grocery store who thinks that's the case. And so consumers are spending more money on necessities, leaving less money for the discretionary items. And so what we saw was Walmart. They came out and they reported almost $170 billion of revenue, which was above expectations of 168. They raised their year-end sales guidance to about a 5% increase. Target, they missed revenue projections. They gave weak guidance and took down earnings estimates. And so here are these two gigantic US-based retailers, and one is putting up sales gains, beating numbers, raising guidance, and the other is going in the other direction. So it's really been a tale of two companies in the retail space this week.
Gary, how much of this has to do with what we say and have been saying is the dramatically understated inflation that we're seeing, consumers resorting to generally lower priced Walmart options, as well as Target kind of going through what you called an identity crisis and determining who their actual customer is and who they're catering to?
So, Rob, it's one thing that's great about posting our work in public is we get great comments on it. And in the five things in the written version, we had listed two factors contributing to this divergence between Walmart performance and Target performance. And somebody suggested a third. So let's talk about all three. One is the fact that if people are constrained, if they're spending more money on necessities, then they're not going to be able to spend as much on discretionary purchases. And so, we think what we're seeing is a shift in business from the more expensive Target to the less expensive Walmart. And I'm also seeing a lot of data saying more people are planning on buying all of their holiday gifts at Walmart. People are looking for the low cost retailer here. The second thing is these two companies have positioned themselves very differently. Walmart, their mission is crystal clear. They are going to be the low priced provider. Walmart is the place that you go to spend less, save money. It's the place you go when you don't have a ton of discretionary income. Target, on the other hand, they've had more of a mixed message for their customers. And we've talked about this a lot, but for their own reasons, they have chosen to take on a lot of the most politically charged, controversial social issues in their stores. And it's led people to say they don't want to deal with it. And the American people are more and more coming to the conclusion that just get us great product at a good price, or good product at a great price, just get us some sort of value. Consumers more and more are saying enough with the divisive other. We're not coming to Target for your view on social issues. And so, I think Target has turned off a lot of their customers, and they don't need to. The final thing, and this came from a really interesting investor on Twitter or X who sent me a message saying he disagreed with our analysis on it. And he made a great point. He said that this wasn't a situation where Target shoppers were shifting to Walmart, but rather a situation where at Target, you have a small amount of their sales on necessities, a large amount of their sales on the more expensive discretionary items. If you go to Walmart, they sell a lot of food. They sell a lot of inexpensive necessities. And he thinks that at Walmart, their sales of the higher priced discretionary items are down as well, but it's being masked by the fact that Walmart has a better mix of product for the current environment. So I think these are three really interesting, somewhat different ways to view the situation. For those of you, I don't shop at either Target or Walmart. For those of you who do, I'd love to know your thoughts on it. Put something in the comments. Let us know why you're choosing one place or another, what you're seeing, what your shopping experience is, and what you think is causing Walmart sales to beat expectations and be up nicely. And we're seeing the opposite at Target. Just put it in the comments and let us know what you think.
As Gary mentioned, please do leave a comment. We'll do some market research for Walmart and Target and be sure to deliver that to them right after this recording. As always, please head to our website as well, deepknowledgeinvesting.com. You can grab a free subscription and be notified of all new content being posted just with an email. And if you'd like, you can subscribe as a premium member. You'll get access to all of the paywalled content, current recommendations, when Gary's buying, when Gary's selling, and being in tune with everything market related, as well as exclusive subscriber events and webinars.